Welcome to Thorgood Tax Talk.
Welcome back to Thorgood Tax Talk with Shamsey Oloko. Shamsey is a seasoned tax defense attorney and founder of Thorgood Law in New York, where he helps clients fight IRS audits, investigations, and tax informant actions with precision and clarity. I'm Evan Mack, and today we're diving into the topic that blindsides a lot of business owners: sales tax audits. From commingled accounts to misreported revenue, this type of audit can lead to major consequences if you're not careful. This is Sales Tax Audits, the hidden risk of small businesses. Shamsey, how you doing, sir?
I'm doing very well. Thank you very much, Evan. Good to be here today. Looking forward to having a discussion about one of my favorite topics, that's sales tax audits.
All right, all right. So right off the bat, Shamsey, what is a sales tax audit, and how is it different from federal tax income audit?
The main difference really is the object of the audit.
Mm,
An income tax audit is going to be an audit of the income that the person or the business makes. Or
mm,
sales tax audit is specifically on the sales tax collected by businesses on behalf of the government.
mhm.
So, by definition, sales tax audits are conducted by the state, while income tax audits can be conducted by the state or the federal government.
Do you find people that are a little more confused by that, or do you kind of explain that to them, or do you feel like something they always kind of just
Well,
figure out?
so people tend to be confused about what it is
Yeah.
until they have a sales tax audit, and then they know exactly what it is because they
Mm.
know why the agent is at their doorstep.
So what kind of small businesses are most likely to get audited for sales tax?
They tend to be retail businesses, and prominent among businesses are restaurants.
Mm,
And incidentally, most of these businesses, they have small margins,
mhm.
and so they tend to commingle funds. They take money from the cash register, put it in their pocket or their bank account without properly segregating the funds. And the further away from the collection of the money you segregate the money, the more likely you're going to be in trouble.
Why do you feel that businesses do that? You just feel like that's because is it easier for them to do as far as move money from the register to their pocket, or is this just why do you find that to be so common?
So the way it works with small businesses is that small businesses, by definition, tend to be a small business where it's just mom and pop. It's just my store. It's just my restaurant, and everything kind of like falls under the ambit. It's mine, without realizing that money you just took in out of that $100. About 10 of that belongs to the state,
Mm,
and if you don't give that money to the state timely, it's going to cost you more money and it's just going to be more expensive for you. Or,
mm.
sometimes, as I hope we can get into it, it can accrue criminal liabilities.
Okay, yeah. Can you kind of elaborate on that? I guess kind of what problems you can have, besides the audit if you continuously do that. You take that money without paying Uncle Sam.
So what happens is, again, the reason why sales tax audits tend to be more onerous than a regular income tax audit is because the money in question belongs to the government. It was never yours. Income tax audit is your money that you're supposed to pay tax on. But this
Mhm,
is their money from Jump Start, and you
mhm,
didn't give the money to them.
mm.
So when the state government comes after you to get their money forcefully, they tag on penalties and they tag on interest on the money and on the penalty. So
Wow.
instead of you owing them, $1,000, you could owe like two, three, $4,000 on that money within a short amount of time. Now, if your situation is a little more egregious, at the discretion, by the way, of the agent, they can actually charge you criminally for
Wow.
larceny uh, because you stole the money from the government. And
Mm,
I've represented clients who got put in handcuffs. Uh,
wow.
yeah, literally over sales tax.
Wow.
So it does happen, yes.
So how do states typically track and flag these irregularities in reported sales tax? You know what I mean? That there's a lot of people, there's different businesses. How are they able to literally track that down?
Well, so I'll give you an example. Say you run a franchise.
Hmm.
Uh, the franchisor has a self-interest in making sure that you report to them your correct sales numbers. So when you tell the government that, hey, listen, my gross income was $5 million, the state will turn to the franchisor and say, hey, listen, how much did he tell you that he made last year? And if the numbers are different, and believe it or not, sometimes they are different, then the state says, hey, listen, Mr. Taxpayer, I think you're not reporting your total number. And also, what it is nowadays is with the technology that's prevalent, the government can dial into your system and know fairly quickly how much money you made this morning. And so and one other way that they can do this, and I've seen this happen a lot of times, they'll reach out to your vendors.
Mm.
So, for instance, I've had a client that says, "Oh, my gross sale last year. This was a liquor store. My gross sale last year was $5 million." Government says, "Okay, fine," and they reached out to the vendors, and the vendors reported that they sold about $20 million in alcohol to the taxpayer. So, unless you have a really serious drinking habits, you have $15 million shortfall. So that's how the government knows that you are underreporting, and it goes downhill from there.
Shamesy, what about cash? I hear that old wives' tale that cash is harder to track, and so a lot of businesses kind of try to be cash only in order to kind of circumvent or kind of get around the like tax things. Is that true? Is it harder to track these irregularities if someone's just like a cash only business?
It used to be more true. First, it's no longer as true anymore because nowadays everyone's got into the comfortable vein of paying with credit cards.
Mm-hmm.
You sometimes, like myself, you show your phone and
Yeah.
bang, money goes to the other side.
Yeah.
And once you do that, that money can no longer be hidden because
Hmm.
the credit card company knows how much you made. So also, by the way, to the previous question, the credit card company also tell the state how much money you ran through them, so they can also tell you.
Wow.
So first, you can no longer do that because people pay, and also the cash register. It's a misnomer. It's no longer cash, but the register is online, and your franchisor, the government, they can access that information online without even coming physically to your store. So it's more difficult to
Mm,
keep cash sales, if you will.
I see. I see. What's a common situation where a client thinks they're fine, but they're actually in danger from what we're talking about?
Well, so to many businesses, they think no news is good news. The government doesn't come to you, then you're fine and you're happy. But that's not always the case. I have a client who there was no hint there was any problem. But it
Hmm.
turns out that client had not been remitting the sales tax.
Ooh.
So what the government did one day is they just showed up and took the cash register away.
What?
They just physically took the cash register and walked away. Yeah. So all of a sudden you cannot do sales. Uh, so to many taxpayers, to many businesses, they think, oh well, there's no outreach from the government, then everything must
Hmm.
be fine. But it's not. It's eventually they come in after you, and you're gonna pay a lot more than you actually took.
Wow. So, but how far back can states go when they're auditing a business for unpaid sales tax? You know what I mean? I think people would like to know, like, is there a cutoff? Can they go back is in history, but or do they have a specific time they can do that?
Nominally, the short answer to that question is 7 years. They can
Okay.
go back look in 7 years. But if they begin to look at you to prosecute you criminally, they can go much further back.
Mm,
Again, the overall theme of sales tax audit is that this is the government's money. This is not your income tax that you're failing to pay. This is their money that you did not turn over. So yeah, they can go, quite a bit ways back.
So can we talk about penalties, or enforcement? What kind of enforcement or actions can result from these audits?
So there's first, if you fail to timely, and that's a key word, timely remit the sales tax, the government can impose penalties on you, and they're quite stiff. Uh, Penalties and the interest on a daily basis on both the actual money and then the interest. So that money builds up, very quickly. Now, you raise a very interesting point, and I think a critical one, because many businesses think, because many businesses they set up a company, a corporation, LLC, and they think, hey, listen, you know what? If if I can no longer run this business under this name, I'll just close shop and I open up tomorrow. Uh-uh. So the government has what's called a responsible person. So the government will look at the business, the way it's being run, and if sales tax is owed, they will arrogate the liability to the individuals responsible for running that business. The interesting thing about that is that could also be employees of the company, not just the owner. So if you're the CFO and you know that, hey, listen, money was coming in, it wasn't being remitted to the government, when they issue the liability, it may be also on you as an employee. So it's called a
Mm,
responsible person. So it could be quite damning, not very
mm.
pleasant.
You touched on it earlier about criminal charges perhaps, but can a mistake in sales tax handling ever escalate into criminal investigation?
Usually, no. And very quickly, in the course of an audit, the agent can tell if it's a mistake.
Hmm.
If you make a good faith effort to report the numbers, and it just so happens that there's a glitch in the system that's or reporting less money, and they usually would know, and they may even waive a good portion of the penalties in that case and just let you go.
So do you not think there's a fine line? Do people try to take advantage of that and kind of either have you seen cases where they're like, oh, it was kind of a mistake, but they're kind of maybe taking advantage of that system?
I've seen all iterations of people trying to get by. Uh, to seasoned auditors, agents, and folks like myself, you can tell
Uh-huh.
when it's an error. Because if somehow you're bringing in, a couple of $1 million every year, and you're not remitting any money to the government, what kind of error would that be? You do know what's happening. But having said that, I've known one or two instances when there was a problem with the cash register, and the register was spitting out the wrong numbers. So they were paying those numbers that the register was saying, but it was the wrong number. And come time for audits, and the government said, "Oh, wait a second, the numbers are wrong." It was like, "What do you mean?" And it turns out that it was an error, and they will make you pay the difference, and you move on, and sin no more.
Wow. Wow. So what should a small business owner do right now to reduce their audit risk?
The first thing to do is keep a professional involved. Um, CPA, a very good bookkeeper, because you're trying to run your business.
Hmm.
You almost don't have the time to also keep a close eye on making sure that you are in full compliance with the sales tax laws. So that's the first one. The second one is, and this is truly under the control of the business owners, is keep the time between you collecting the money and giving it to the government at a minimum. Segregate the funds, remit the money as promptly as possible, and you keep your nose clean, and you would never have a problem.
Mm,
And the last bit on that is timely filing.
timely
Because
filing.
in addition to sending the money, you also have to file a return. If you do that on a timely basis, you will almost never have any problem.
How important do you find it that to keep documentation, maybe just keep a consistent file? Do you find that to be like paramount when it comes to all of this? Literally just being organized? Can that help?
Yeah, I think it's critical because the more records you have, the better you're able to survive an audit.
Hmm.
Contemporaneous documentation, money that comes in. You show how the money came in, and the identity of the money and how you separate the money, and the money went to the other side. And especially when you have a professional that's assisting you with that task, so it's less likely that someone is going to say, "Hey, listen, you took the money and you didn't give the money over."
Awesome. Shamsey, thank you so much for the information, sir.
Thank you very much. Even good spending time talking about sales tax. I know it's not the most sexy topic, but it's something that clients need to know.
Oh, absolutely. It's informative though. There's information that can help someone definitely if they're going through that. And everyone at home, if you're a small business owner and you're not sure if your sales tax reporting is airtight, now's the time to find out. Visit thorgoodlaw.com for help before the state comes knocking. Don't forget to like, subscribe, and leave a review if this episode is to help you stay protected. Thank you so much, guys.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.